Well, welcome both of you. Thank you very much for coming here. The topic that we're going to talk about is what's the latest and greatest in crypto and where we're going. And obviously, we are phenomenally thankful for you both being here. You guys basically need no introduction, but for the live stream audience out there, maybe a 30-second each would be a great place to start.
Thanks. So yeah, my background's macro investor. In 2011, got interested in Bitcoin and decided to launch the first crypto funds in 2013. We now manage about $5 billion across the spectrum of super liquid all the way to venture equity. And Mike and I and a third partner really got it all going together.
That's true. I'm Dan's shorter and more follically challenged cousin. We went to college together. We worked at Goldman Sachs together. We lived in Tokyo together. He then left to do a hedge fund, and I was a sales coverage for a while. And then we were both doing macro hedge funds together. There's a whole story here. And we got together on crypto, and I give him a lot of credit because when I called him and said, hey, what do you think about this thing, Bitcoin? And he took a couple weeks to look into it, and he was like just hyper bullish and was willing to put a ton of money into it. And I was busy at the time running a hedge fund. I was like, well, if he's putting that much in, I have to put at least that much in. And so our original $93 Bitcoin slug was sized by Dan. And it's funny when you think about the fortunes that have been created in crypto, it's not just entry point, it's how much you put in at that entry point. And so that's my thank you. Galaxy is a crypto investment bank. We have banking, we have a sales and trading business with staking, we're trading on-chain and off-chain. We have an asset management business. We've run a lot of risk on the firm's balance sheet. That's slowly going to shift as more of that goes into the asset management business. We have an infrastructure business, and we've got a big Bitcoin mining business, which is being transformed into an AI data center. And so hope to get public. We've been waiting 4.5 years. There's a new SEC, and so I think you're going to see a whole host of companies come May or June listing on the New York Stock Exchange or NASDAQ. That's it. There we go.
Totally 30 seconds. Thanks, Mike. So let's just jump right into it, right? So 2024, super interesting year. Obviously, we have a change in administration, Bitcoin resurgence. How are we thinking about the broad view of where we're at now? 2025, February, we're here in New York. Things seem to be changing very quickly. Things are new again, shall we say? How are you guys thinking about the status quo and where we're at right now and where we're going in the immediate term?
I'll take a quick crack, and then Dan can correct me. Listen, there was 4 years in the desert where this industry felt abused, and the relief of non-abuse, the relief of feeling like you're not a criminal or a drug dealer when you go to see a bank, but you're actually in an industry that could be, part of the future of both finance and the consumer space. Feels good. And so you've seen a deep breath and an excitement. I was at the inauguration, and the crypto ball had an amazing energy. And a couple of bankers came to me, they're like, we don't get a banker's ball. It really felt like, this was the moment for crypto. It was the hottest ticket in DC that night. And the next night at the vice president's ball, where there were only about 300 people, I walked in and I saw Zuckerberg and Peter Thiel and Steve Schwartzman and Leon Black and all the big financiers. There must have been 20 crypto CEOs. That's out of 300 people. We were wildly overrepresented. And so it all felt great. Of course, the Trump coin didn't help that spirit. But it does feel great. What does that mean for us? Listen, Bitcoin has a store of value. It's carved out a lane. It is becoming global. It might or not be on the government's balance sheet in 6 months. I actually think it will. I think there's people that are trying to figure out how to do it gracefully. And so I don't think Bitcoin's going away. Stable coins, you had stablecoin legislation by Senator Hagerty announced yesterday. I think that's strategic for the US, and it's going to be the growth of this industry for a while. We see payments all abroad, and we're investing in payments from our venture business. that's going to grow. Right now, stablecoins are like the 13th largest owner of treasuries. I will be shocked if by the time the Trump administration ends, it's not a top 3 owner of treasuries. There's a couple other lanes, right? Why a lot of us got into crypto, if you weren't a Bitcoin maximalist, was this idea of Web3, of private property on the internet, of decentralizing systems, and of cutting out the middleman. A lot of activity in that space, but no real applications yet on scale. And I think the next 4 years really has to be about, having zero-knowledge proofs show up on your iPhone when you use your ID, or some applications that get people. Because, again, we're still at the point where valuation in crypto is narrative, right? Bitcoin's narrative is digital gold. And so the narrative at one point has to be met with some utility. Otherwise, we just have a casino and things go up and down. And because it's so easy to issue tokens now, you have almost an infinite supply response. And so while you're seeing Bitcoin, Ethereum, Solana, XRP even, the other than Solana, the top 5 tokens were issued way back because they had time to build their communities. And those communities are really, really vibrant. The biggest surprise that I've seen in this market was how resilient communities of what I thought were tokens, were. I would have never thought XRP would have been the best performing token after the inauguration, but it was. The XRP army is vibrant and strong, and I was even talking to Brad Garlinghouse. He said, I'm not even sure where it comes from. Where this passion, but it's passionate. And if you think about what I'm getting to the point, I promise. What we learned in crypto, and the older you are, Dan and I I'm 60, he's probably close, the more difficult this is to understand, is that community became a part of the investment, algorithm. And we didn't really pay attention enough of that early on. And I used to joke about the tattoos, the Bitcoin tattoos. Very few people have Microsoft tattoos, but thousands and thousands, tens of thousands have Bitcoin tattoos, right? There's something more than the association with the stock. Well, that same idea in Bitcoin exists in XRP, it exists in Celestia for a smaller way. And so this idea of community as an investing input, we're now seeing, you could say Tesla has always had this crazy valuation because of this idea of the Tesla community. And the jury is out. Is that a permanent function of how we value things around the world? Right? Certainly the younger generation is driven towards memes. It's driven towards this idea of memic investing. It feels like it is. Then you have a day like Monday where things fall 30% and you're like, oh, what was I thinking? And I think that psychology up and down is going to still be part of our dynamic until we get the utility. And so that's kind of how I'm seeing the world.
Awesome. I actually do think we're at a huge inflection point. And so when Mike and I first started, I was conceiving of it as like such an important piece of really the final piece of the protocol puzzle that's the internet, and people had no exposure to it. And it was time to get invested to it. I really feel like we're at kind of a similar point right now. We've been so repressed by the fear of regulation or the lack of certainty. I think everyone in our industry kind of has Stockholm syndrome right now. Like, we're so used to being afraid of the government and of like not trying to do anything. And, I've been on boards of big exchanges. It's, so scary to list anything. And that the rebels just threw the gates open and there's sun beaming in, and we're all just still sitting there like too afraid to be excited that it's a new a new era. The market's only up 25% or something since the election. I think it should have doubled, right? So I'm so bullish because the regulation in the US was kind of the last kind of scary thing or bad thing about crypto. It's going to get more clarity. It's going to be more positive. Huge change that not enough people talk about is not the president, and every single person in his cabinet, and Mike just listed, are all massively pro-crypto. Yep. It's not just that. It's not just Congress flipped. is there used to be this huge group of people in Congress that were anti-crypto. And I always thought, who's the no voter on crypto, right? Like, there's no one out there that's negative. And Mike and I actually met with Vice President Harris's campaign manager, who's her brother-in-law, about 3 weeks before the election. And she still had not used the word blockchain in the entire election. And I just said, hey, there's 50 million Americans that own crypto. So many of them are so passionate, they're single issue voters. They don't really care about any other issue. They just want the pro-crypto candidate. And this election is going to come down to, a couple percent here or there. You might as well say blockchain is probably going to help, right? And a couple days later, she finally did. And I think when all the PhDs are written, this election did turn on President Trump going pro-crypto in May. And the big change is there were 58 contested elections in Congress that the pro-crypto political action committees competed in. 54 of the anti-crypto people left Congress. Nobody's going to say anything bad about crypto in Congress again. And I think that is massive. And so I'm as bullish as ever. And I think the question of inflection points is, it was kind of scary for like a public pension plan to invest in crypto 2 or 3 years ago, right? You've got the SEC suing Coinbase and Ripple Labs and all these great companies. So that's the big change, is it's going to flip from very scary to probably really positive. And so 2025, I think, is going to be one of the most interesting years.
Excellent. Yeah, and I think this dovetails nicely into where we're going next, which is sort of questions about institutional adoption and really regulation. So a frequent argument you hear is, in order to get to the next step and to push Bitcoin to be doubled instead of up 25%, we really need to see large pools of capital, aka institutions, really come into this space, and really large financial institutions adopt this. Are we close to that? Are we getting there soon? How are we thinking about?
If you think of BlackRock went all in last year, I think the single most important thing pre-election in Bitcoin in the last 5 years was Larry Fink being orange-pilled, because he just represents institutional investors, whatever, $14 trillion or whatever they manage. Now everyone's getting engaged. And so I think you're going to see one after the other. The pensions get in. I've got to get. I was actually at lunch with the head of one of the biggest sovereign wealth funds in the world about 2 weeks after the election. He was like, "We didn't own Bitcoin, but now we're going to. Like when the U.S. buys it, we have to." I mean, he was that specific, and so he was cutting his first $500 million check to dip his toe in. And so I think you're going to see the sovereign wealth funds load up. You're going to see pension funds. And it's going to start with Bitcoin because that one makes sense to them, digital gold. It's interesting, the same journey that most individual crypto people take is what institutions take. They start with Bitcoin, they want to understand what Web3 is and Ethereum or Solana or one of the other chains, and then they say, well, wait a minute, where else does it work? I think the other thing to watch is, like, when we started pitching people, there was this criticism, blockchain's a solution in search of a problem, right? You heard that all the time. And why haven't we had decentralized ticketing or decentralized rideshare or decentralized social media succeed, right? We haven't. There's two reasons. One, blockchains weren't fast enough, safe enough, and decentralized enough. And now with the advent of these level 2s on Ethereum or Solana, you're getting there. And two, the regulatory environment was so unclear that non-maniacs, non-kind of crypto degen, or people that didn't have a lot to lose, had the confidence to go build on top of these blockchains, right? If you worried that the SEC is going to give you a Wells notice by launching what you think is a utility token for photo sharing or you name it, you don't do it. And so what I'm hoping is the next 24 months, we start seeing bigger capital projects built on top of I'm somewhat indifferent to what that web of block space looks like, right? If it's Linea or one of the others, Ethereum L2s or Solana, or in some ways that doesn't matter. In the long run, to almost everyone who uses this shit, it's the back of the TV, right? And we need to have the front of the TV work. And I think that's what we have to look forward to in the next few years.
Yeah, I was on CNBC recently at the end of last year, and they were like, hey, Bitcoin doubled this year. It's a bubble. And I'm like, hey, first, we've been running a Bitcoin fund for 11 years, and it's on average doubled every year. So that's not even news. And secondly, how can you have a bubble that nobody owns? The median holding of an institutional investor in blockchain is zero, like literally zero. The majority of institutions have no exposure to blockchain. It's not a bubble. We haven't even started. And like Mike, we're getting so many inbound phone calls from institutions that like 2 or 3 years ago, you had no interest in blockchain. There's 500 trillion of kind of real assets out there, if you will. Crypto's 2 trillion. It just seems like if a tiny fraction of the real world assets migrate to crypto, which I think they will in 2025, I think that's the story, is these checks that Mike were talking about, I think they're actually starting to happen in massive scale, and that'll keep driving our growth in our industry.
Yeah, the other thing to remember is whenever it feels great, like the inauguration felt great, and then the Trump coin came out, and that might have been a short-term high. You got to be a little careful, and whenever it feels really shitty, it's probably time to buy. And so, could we go back to 80,000 in Bitcoin and 150,000 in Solana and 22,000 in Ethereum? Of course we could. And that doesn't invalidate this space at all. It's quite frankly, that's the buying opportunity. People get a little bit too long. It takes a while for institutions to get in, right? They're not retail. And so I think it's really important to kind of think of second half of this year to really see the flows. And again, is there a narrative that could change negatively? Not many. The only one that really could would be if miraculously Scott Bessent and Elon and Donald Trump, got our budget deficit from 7% down to 3%. We're busted, right? That would change the Bitcoin narrative some. It wouldn't change the crypto narrative, but it would change the Bitcoin narrative. I actually talked to Bessent about it. I was like, dude, if you're successful, I'm going to literally punch you in the jaw. And he said, no, my real goal is to get gold price down, but Bitcoin price should go up. And I was laughing. He said, well, you're right. My job is to balance the budget or get closer to it and be a good fiscal steward. But I also think we're going to have so much adoption in crypto that even if we do that, it's not going to stop this wave of adoption because we've, as Dan said, we've retarded this space for 4 years. And so do I think Scott Bessent and Elon Musk and Donald Trump are going to be successful spending less and increasing tax revenue? I don't. I hope they do. I'll say a prayer for them, but I don't. I think that we are kind of almost past the point of no return in how bad our finances are, which makes Bitcoin really an appealing asset for any portfolio. But that's the thing you got to watch.
Elon earlier this week said that he wanted to see Treasury run on a blockchain, right? I mean, he was like, I'm diving into this, and he's like, talking about injecting, sort of the auditability and authenticity, and simply just using a blockchain as a ledger underneath the Treasury.
Yeah. So what's interesting is, again, crypto is not one word, right? Bitcoin is digital gold. Putting your budget on a blockchain is a brilliant idea, and that would probably be on Ethereum or Solana, or you pick your poison. It's got to be on a blockchain that the government trusts. And so we're still, no one's going to snap a finger, right? There's an irony. Blockchains are trust machines, right? They were built to distribute trust because we didn't trust the man. But you still have to teach people to trust the trust machine, right? Van Jones once came up to me, and he'd got a $100 million grant from Jeff Bezos. And he said, I want to do blockchain-based voting. And I was like, I got a great idea. Start with American Idol, right? Something that isn't that important unless you're an Idol fan. Because even if Dan could prove to statistically blockchain-based voting is safe and you can't change the votes, the population doesn't believe that. And so we're going to have to ease people into this, and it's not going to happen overnight.
That's good enough. Yeah, I totally agree.
Yeah. Yeah, I think, certainly, what we've been saying here very much dovetails with that. So I think we have a lot of conversations. A lot of those conversations very frequently are, we would do more of this if we thought we could. And very much this new outlook that you guys are sharing, I think, is very, very promising. As we look forward a little bit beyond into later 2025 and beyond, certainly we're very pro-tokenization. That's something we harp on all day long here. How do we see that coming from, what we're thinking in terms of the breakouts for like later on and beyond? Is it tokenization? Is it really this continued education on the very, a lot of the people in this room are very familiar with like how a blockchain works and what Bitcoin is and stuff like that. Are we still very much in that education phase? Or at some point, do we start breaking out of that into the next step, the next era?
I'll take that. I think what you're doing, tokenizing, is so important because the current systems really are pretty broken, especially for the global community. Maybe not for Americans, but for people in the developing world, that don't have any access to finance. Tokenization is an incredible tool, and allowing people to buy, say, for example, treasuries anywhere on Earth with a smartphone is just really amazing. And the thing that I think is so funny about how much better blockchain is than the old school alternatives is best described in the treasury market. So some of you might know you can buy treasuries directly from the government via Treasury Direct, and I used to do that a bunch. The government is so bureaucratic and so behind that it literally takes you a year to move your 90-day T-bill out of Treasury Direct to Merrill Lynch. They are so behind in processing your payments that it takes an entire year to move it out. With Onto or any tokenized thing, you just hit it on your smartphone and 10 seconds later it's happened. Massive improvement over what we're doing. And so tokenization is huge, hugely important. And I would actually say, I think that's a big part of why President Trump changed to being pro-crypto. Stablecoins, which is kind of a subset of tokenization, is putting our unsustainable, and I agree with Mike, totally unsustainable debt onto a smartphone and sending it to the furthest corners of the earth. And Trump is, a genius at things like this. He realized that's an amazingly good thing, is we're pumping out $2 trillion of debt. You need more buyers, right? Because the current, buying community is saturated. But if you can get, kids in Indonesia or whatever to be able to use a smartphone to buy a stablecoin, that helps fund the U.S. deficit. So I think tokenization is both hugely important in and of itself and big for why the current administration has flipped to being pro-crypto.
Yeah, since Dan and I have been selling Bitcoin since 2013, we've got a lot of similar stories because we share them. I used to be fascinated by the fact that there are more $100 bills in pillowcases overseas than there are $1 bills in circulation, right? Traditionally, people in regimes or in areas that were unstable wanted to store their wealth in $100 bills in pillowcases, or, not a pillowcase under your mattress. And so shifting that, and the genius of being able to tokenize a treasury, in essence, a stable coin that pays interest, is all these people who are barely making ends meet to start with are going to get that carry. Now, it costs the Fed, right? There's about $2 trillion in circulation at 4%. That's whatever, 80 billion a year. I think I did the math right. That the Fed is going to lose at one point if there's no cash, right? And if right now stable coins accrue to the issuer, that just can't last forever. It just makes no sense. And so I think you'll see that regime shift. It's a great segue into the fact that a lot of the real world asset idea, a lot of what Web3 will look like is plumbing, and it's collateral management. It's not sexy. It's not as much narrative as actually plumbing. And I laugh. I've been the CEO for a while. I'm a storyteller. Dan's a very good storyteller. At one point, he at least was an engineer at college. This industry is going to have a lot more engineers sitting in seats like this. And they're going to be talking to not necessarily investor groups, but industry groups of saying, how are we really going to rebuild this infrastructure to make it more efficient? Because what blockchain really will do is, I mean, think about trying to transfer a share in the Pantera venture fund, right? You got to go, it's paperwork. At one point it should be tokenized and I can sell my share or buy more because I like Dan so much. And so we're going to have a revolution in plumbing that hasn't happened yet, but is going to happen. And I think it might sound less sexy, but that's where we're going to be a lot of this things happens. And even like when you think about stable coins, the very first meeting we had with a big CEO was with Jeff Immelt, chairman of GE. This is 2015, and me, Dan, and 2 other people. Vitalik.
Yeah.
Vitalik was 16 at the time, or 17. He showed up late. We go to dinner with the head of GE, biggest company in the world at the time, the head of GE Capital, and their CFO. 3 of them, 4 of us, 1 facilitator, and Vitalik showed up 20 minutes late. And I was like, dude, you can't be late to dinner with the, we were adults already and pretty established, and we got there an hour and a half early. I was like, he's like, well, my flight was late. I was like, you flying the night before, But we were talking Internet of Things. That was 2015. There's been no crypto Internet of Things. That was one of the big things. You're going to have a jet engine, and it's going to run more efficiently at times. And you're going to do micropayments back to the company, and it's run inefficiently. You're going to give them to the buyer, and all of that idea was percolating at that dinner. It hasn't happened yet. It's going to happen, right? We're doing a stable coin in Europe, a regulated stable coin, BaFin rules with DWS and flow traders. And Deutsche Bank took us around to talk to some of the big industrials. And they were like, as soon as there's a regulated stable coin, we're in. And so there'll be, again, more plumbing and more use case. And as those use cases happen, you'll see more volumes on these blockchains. And I think what you'll see is this shift from just narrative to utility. Because at one point, you can't have 55 L1s. The narrative all sounds the same. And it's why, quite frankly, the originals have kept their value better than the newbies. Because the originals were able to distribute much wider earlier because there wasn't as much competition. And I think community will still be a big part of valuation, but you're going to see utility have to be part of it.
I think that's a great place to leave it. Thank you.
You got to get him. I talk too much.
I just want to do one little code on Mike's thing. The reason I'm so passionate about investing in blockchain is, Mike and I have traded all kinds of crazy things for 40 years, and some things, like dollar yen's not even moved. It's the same place it's been the whole time we've been talking about it. Blockchain is the most inevitable trade I have ever seen. All these things will happen. It will disrupt all of these. And even the IoT thing, we were early, that was a little early, but DePIN is happening. And it's like the new version of that. And so that's why I think everybody in this room should have some exposure to blockchain, because it might not happen in the time frame that we're estimating, but it is so inevitable. So it's definitely worth having.
Inevitable. It's a great place to leave it. Mike, Dan, thank you so much for joining us.
Thanks, guys.